How are you guys doing? Lesson 29. It's the same day, so I have the same shirt on from last lesson. Don't judge me. But I want to talk really briefly about what you should expect and what you should be focusing on moving into our next section, fundamental analysis. Now, there's going to be a lot less charting. There'll be some with the rest of this class, but it's going to be a lot more like websites and showing what I do and what PE ratios and all these really important things like earnings, what these things mean, and going into that. So before we get into our review, this is our little house. Remember this? We're making a Lego house because, again, the whole point of this class is based off of systems and structures. In case you forgot, you want to be reminded, a trading system is different than a trading structure. The system that you have is the time frame, is the market cap you have to focus on, the volume you have to focus on, your holding time, all these things most people, 98% of folks who do these kinds of things focus on. What I'm trying to teach you along with that is the structure, which is this, right? I wanted us to build an actual foundation. This foundation is based off of risk management. This little wall here, remember, this one right here is technical analysis. We're gonna add 4 more blocks high for fundamental mental analysis. We're gonna build our trading plan here. We're also gonna then have macro markets and then goal setting and then put the roof of consistency on top. So it's important to keep these things separate. I actually have a wheel to differentiate, as you can see. Let's take my head. A little wheel, right? Because this is what keeps this bad boy going, right? So you have your actual system. So you can get this good angle here without falling. You have your system inside the structure. So again, let's build our second wall today, our trading plan, and how we differentiate between these two things and why it's important. So the first thing of a trading plan we discussed was indicators. This is, it could be part of technical analysis, but sometimes they matter different for different things, and indicators should never really change, but I kept in the trading plan section. Indicators can do 4 things: trend, momentum, volume, volatility. That's it. If someone uses them for different reasons, there may be some validity behind it, but most times than not, you're using those indicators for those 4 things. For trend, I use EMA lines. And again, we use those in so many different ways through trading plans, right? You can use them for macro markets, which we're gonna talk about, but use them for the 180 day, showing you the 10, 50, 200, like how each line does things different. And even for like catching a runner, you can see on the 1 minute chart, they're still very valuable, right? So indicators, trend, that's what I used. Momentum for your trading plan, we used RSI and stochastic. And again, RSI shows you a great value or oversold, and then stochastic does the same thing, but also does a really good job of showing divergences. So your trading plan, make sure you have trend, momentum covered. Volume is simple. We use volume profile, I do, but you also use normal equity volume, right? Because if you have 10,000 shares traded a day, you're not getting out of your position very quickly. But if you have 10 million a day, you're probably gonna get out of your position very quickly. So again, volume is really important. It shows supports and resistances as well. But again, it's really important to have your trading plan in your goal setting risk management. Hey, I gotta be liquid. Tesla's way more volume, and then like a small farm and play, right? Keep that in mind. And lastly was volatility. I use the Vortex. It shows you green low, red high, or they're consolidating. It's great for volatility. And so is the VIX. We talked about VIX, the VIX, right? We talked about that and how when the VIX spikes, it shows fear and unrest, and when it nosedives, it shows confidence. So that being said, that's our first part of the trading plan is indicators. Here's our first brick. Let's put that bad boy right there. Yeah, we're building it right now, boys. The second thing that we discussed was loading zones. And again, we built most of our loading zones off convergence, where your support, your resistance above it, your trend comes in and makes a pattern. You have EMA lines, you have volume right there. Then you kind of go with your RSI, stochastic, and Vortex. It either supports or deters you. You write that down saying, hey, we have a loading zone from $1 to $150. We write that down, we chart that, we're good to go. So we're gonna add ourselves our second part of the wall. We have 9 of these, Second part of the wall is built. We have our indicators, we have built in our loading zones. We then talk about price targets. Just like with having a loading zone, we used indicators, we used resistances, we found our patterns like resistance trend lines, and then we would plan our price target. And again, if you crash through that and keep going, if you blew past your price target, refer back to lesson 28, you're in good shape nonetheless. But again, we always have our price target written down or drawn on the screen. So we have our price target right here. We got the little bricky brick, building a structure for real, huh? A1. We then discuss stop losses in our plan. You must always have a stop loss. Even if you're more of an active trader, you can watch our position. Having an alert or just an area like I'm prepared to exit here because this looks like a spot where the pattern breaks or a support dies. So you can use hard stop losses, you can use alerts, you can scale out or scale into position. But again, the stop loss must be used. You have to have some idea what's happening that low. So again, in your trading plan, you always have to have a stop loss, or at least an area in mind to get out. So we have our stop loss here. We're gonna add that piece right there, looks good. We then discussed writing the actual trading plan. You can do anything you want. If you wanna put it on the actual screen like I do, great, and put it on the actual chart, fantastic. I also write mine out for my clientele, who then I just save as a PDF for myself. But again, writing it out in 2 spots is probably the best thing for a beginner. Actually drawing it and actually writing it is the best thing. But again, you have to be consistent and have an edge built that you write out every single trade. So again, we have our next little brick here. That's for our next wall. So we're actually writing a trading plan, adds that structure as well. That's great. Then we discussed how to buy in. I had 3 strategies I covered for you that were very similar to the validating out strategies. Value, EMA confirmation, and then scaling in. You can use any 3 at any given time. There's no real better or worse outcome for either one. But again, I think scaling in is the best way to catch runners. EMA lines are the best who are adverse to risk, who want to see some life first. And then value are more like me, who want to see a dead, accurate, great value, right? Like it's dropped 30%. I'm going to pinpoint that and enter. All 3 work fine. But again, you find that loading zone, and once you're in that yellow box, you can then act upon any one of those 3. That's what I like to have for my plan. Write that down saying I'm entering the value. I want to find value, enter in, we're good to go. Here we go, our 4th to last brick, add to our structure. We then briefly discuss losers. It's just what all the greats say. Why would you cut your winners and keep your losers? Why would you do that? Again, we want to keep our winners. Again, if you have a nice big runner, hold it, and then you can sell later. But if you have a loser, just cut it. From here on out, if you have any bags from before, mathematically speaking, this is a battle of emotion versus math. Mathematically, cutting a bag you're down 40% on is really stupid. If you hold that for 2-3 years, at most, you're going to make money. In this bull market, you're more likely to make money. Now, if you're watching this in like 2024 and the market's completely crashed, oof. But right now, in this given time, you're doing just fine. Just hold it if you can, and of course, if you have any new positions, holding a bag is just not, it is not what we're doing anymore. It's not for risk management. It doesn't fit trading plans or goal setting. It doesn't fit consistency. No more past this spot will you be holding any losers. Sorry, you have to cut them. Not the ones you're currently holding, but newer ones, you got to cut them when they start to drop. Let's add that little tidbit right there. Delicious. Second to last, we talked about validating out. Just like buying in, we had 3 validating out strategies. Price target value, hitting it, validating under an EMA line, and of course, scaling out. Just like with scaling in, scaling out is probably the best way to get runners. If you want to hit a nice big peak here, sell half, it comes down, you hold, it keeps going, fantastic. Scaling out's the best for getting runners. EMA lines are the best for also a mix of running, but again, you want to ensure that it's ran its whole entire course. Of course, you're not going to get the whole move. If you're following the 50 EMA line, it runs up pretty quickly. And it may have a good dip to come down to really kind of validate out. But again, for slower ones that kind of bounce evenly, EMA lines are great for validating out. And then last is value. You hit your price target, you set a stop loss or trailing stop loss, you call it a day, you're going to be green, let that bad boy run. You choose, all 3 are fine. So we have our second to last brick right here. Add that to our price structure, to our trading structure. And then lastly was runners. Just quickly, I want to show you a few things. Yes, previous supports and resistances do usually line up well with runners. And then 2, indicators like EMA lines work well on the 1 day, 1 minute, 5 day, 5 minute, 5 day, 15 minute. All those smaller time frames, they work just fine for helping you validate out as well. So again, when it comes to runners, my main goal is to hit 100%, sell half my position, and then have a free investment the rest of my life. With that being said, we have our last brick to add on here. So there we go. Look at that. Beautiful. So we can see now we have our little baby technical analysis wall being built right. We have to get this finished with fundamental and then mental. This is all our trading plan here, protecting our little baby system. Protecting our little baby system there right now. Let's get in the light. We can see now, you know, if none of these walls were here, if we took all this away, and this is just what you have.